Hi traders, welcome to the video. Please pause the video and make sure you understand the disclaimer before proceeding. Traders, Anthony here. Okay, we're looking at the euro dollar. I'm going to come back to this chart. There's a lot going on here. Let's just quickly go out to the weekly and I'm going to mark up current price. Look at this level through here. We've got this candle body open here, weekly level, big support level. So we'll just mark that up as a weekly support. Comes into play, yeah, back through here. Just have a look at these candle bodies. Then through here, this one, this one, this one. And then down to the daily. Now I'll just do a quick top down. What have we got on the daily? Look, have a look back here. Body candle open here, right through there, daily. So we've got this weekly daily combo. And if we go down to like a 5-minute or 15-minute chart, this range will make a lot of sense. So have a look at it on the 4-hour and also the daily. If we could just go back quickly, just notice here that we're messing around down around these levels here. Here, back here, look at these highs. This is a big support level. 4-hour chart, what I'm looking at on this time frame is this. We'll have this distribution range through here. This balance area trades off. Just mark that as a range, that'll do. Trades off, and what we get is, have a look at this thin leg here. Thin leg as in there's nothing left and right. So if we pick up the low on the candle at the left and the right high, the high on the candle on the right, and pull that through, this is definitely a level of interest through here, or a range of interest, and we'll call it a gap, price gap. So we get this balance area above in through here, and we get this strong impulsive move to the downside where we have this bearish imbalance, where there's more bearish orders in the order book than there are buy orders. Up here, where we have these ranges, well, we have more or less, to whatever degree, a balance of buy and sell activity. So the market, when it's out of balance like this, is going to look to rebalance at some stage. And you can see that up here. See this range through here? And have a look. We trade down and look at this move back. So, quite often you're going to see these big spikes up, filling these gaps. Like we traded off here, and what happens? It spikes back up into it. Look at this one here. Trades off, and then look at that spike back up in. So we're out of whack here, as far as I'm concerned, overextended to the downside. Look what's happening at the moment. This is pushing south. How many retail traders are getting trapped short here? A lot. The market's going to look for two things. One, it's going to look to rebalance, and the second thing it's looking for is liquidity. And if we look at this from that perspective, think about it. Where is their liquidity resting? Well, liquidity pool in through here, right through this gap, ripe for the picking. Yeah, don't chase this south. This is overextended. And even if we grab a Fibonacci and we pull it from this distribution high level down to the low, see my yellow zone, 61.8786. It makes a lot of sense. It's a bearish trend. It's overextended. It's Monday. Be careful. They'll trap traders short here, and it wouldn't surprise me that they take this right back up into these levels up here, looking to rebalance, looking for liquidity, and then then we might get. So for me, look, definitely I don't want to be shorting this at this level. These stops will most likely get taken out. I'd be interested to see if we get a pullback into the 61.8, something like that. By the way, guys, if you haven't already, click the link below and join my free Telegram group. So my thing with this is, and look, if you have a look at the stock markets, they're fairly similar. They're all overextended as well. I'm not going to get involved short with that. I would be interested if we see a move back up, even to the 61.8. I would enter here with, say, a small position, even setting up a pending order, a sell limit order, sell, and that'd be, say, 0.2% of my account, something like that. I allow 4 trades, maximum 0.6 per trade, and that gives me 2.4% exposure. If you're trading a prop firm account, you've got to really keep a lid on the risk. So that would be my, this is my sell zone right through here. Could mark that up, sell zone. Like if I'm not in front of the charts, I could set up a couple of pending orders, and the other one would be around the 78.6 here at the base of this bearish order block, something like that. And I mean, you know, if it doesn't, if these levels don't get reached and I miss out and this thing trades off without me, I'm happy to let it go. I don't want to get involved down here. And I'm not really looking for a counter trend trade. I want a trend continuation opportunity, and then my stop loss is going to go, well, this high, and then we've got this high back here. Have a look at these levels back here, something like that. That would work for me. Stop loss. And then your targets would be, or target 1 at the high of this level down here, this range, so that'd be T1. My stop losses and targets, I'm always looking at where there's levels of support and resistance. That's the only way I'll do it. So that's target 1. I would take 2/3 or 65, 70% of my position off and then just trail the rest, see what we get out of it. That's one way to approach it, or close everything at T1. So that's my take on the euro dollar. Be very, very careful. This is not a trade signal buy at all. And I'd like to see a move back into this range, and then I'd be happy to give that a shot. So yeah, that's it, guys. I hope you enjoyed the video. Join Telegram, link below. With that, safe trading, and I'll see you in the next one.